A historic U.S. government shutdown is creating some serious chaos in the traditional economy. So, what does that actually mean for your crypto portfolio? Today, we're going to break down the data to see exactly how this economic storm could shape the next 30 days for investors. First off, let's just get a sense of the scale here. As of early November 2025, the government has been shut down for over 36 days. I mean, that makes this the longest shutdown in U.S. history. And the human cost? It's just staggering. We're talking about 1.4 million federal workers who have been furloughed. That means they're out of a job and, crucially, not getting a paycheck. And the economic damage is absolutely immense. The shutdown is creating a drag of roughly $15 billion per week on the entire U.S. economy. So, this isn't just some political headline, it's a massive economic event. Okay, so let's dive right in. To understand how all of this hits crypto, we first need to look at the very strange, kind of split personality of the U.S. economy right now. On one hand, you've got this incredible underlying strength. I mean, third quarter GDP was growing at a hot 4%, and investment in AI was just booming. But, and this is a huge but, all those positives are being completely overshadowed by this immediate crisis. The shutdown, shockingly weak job growth, and all this ongoing tariff uncertainty. And listen, this isn't just about abstract economic data. That economic drag has real-world consequences. We're talking about 42 million households facing disruptions to food assistance programs. This directly impacts the finances of everyday people. And a lot of those people are also retail investors. So the big question is, how does all this chaos in Washington actually ripple into the crypto world and affect your digital wallet? Let's break it down. It all comes down to one key concept, a liquidity crunch. And in simple terms, all that means is that when paychecks stop coming and benefits get cut, cash gets really tight. And when people need cash, what do? They often sell their most speculative or riskiest assets first, which for a lot of people includes their crypto. Now, what's really interesting here is that we're already seeing this happen. This isn't a theory. Analysts are literally reporting that furloughed workers are being forced to sell their crypto holdings just to cover bills and make ends meet. It's a real-time market force. And this slide right here shows why that selling pressure is so significant. See, unlike traditional markets, crypto is dominated by everyday investors, who make up about 2/3 of all trading volume. So when they feel financial pain, believe me, the whole market feels it. But here's where it gets fascinating, because there's a historical parallel here. If we go back to late 2018, very similar economic fears caused a sharp dip in Bitcoin. But that pain actually forced the Federal Reserve to change course and inject more liquidity into the system, which then fueled a powerful 40% rebound for Bitcoin. You see, pain often leads to a policy response. So, if history is any guide, this pain could be temporary. And this brings us to the actual price forecast for November, which predicts that exact pattern, a short-term dip followed by a powerful recovery. So, let's get to the bottom line, right? With all this chaos swirling around, where are crypto prices actually expected to go this month? Here's the forecast. For Bitcoin, analysts see a potential dip down to around $95,000 as this shutdown pain really peaks, but then followed by a rally to as high as $120,000. You're going to see similar V-shaped patterns for other major coins too, but notice the risk levels. Assets like Solana and DOGE are considered higher beta, which really just means they're expected to be more volatile, swinging lower in the dip, but potentially much higher in the rally. And this chart just visualizes that potential rally from the projected lows to the highs. We're talking a solid 26% upside for Bitcoin, but a more significant 37% potential gain for a higher risk asset like Solana. So it could really reward those who can stomach the volatility if the market turns. Okay, now for the big so what? How do you actually translate this forecast into a clear, actionable strategy for the next 30 days? Well, the advice breaks down into two pretty simple phases. First, for the next couple of weeks, the strategy is defensive. Reduce your leverage, build up some cash, and get ready for those potential dips. Then, in the second phase, the strategy completely shifts to accumulation. You use that cash to buy blue-chip assets, the more established, reliable players like Bitcoin and Ethereum on any weakness, just ahead of that expected recovery. Of course, no forecast is a guarantee. The key risk here is that the shutdown drags on past mid-November. That could signal a deeper recession. On the flip side, you're going to want to watch for any announcements of rate cuts from the Fed or any new ETF approvals, because those would be major catalysts for a rally. All right, let's zoom out for a second, because what's happening right now isn't just about 1 month of volatility. It actually speaks to a much larger theme in the crypto market. And this quote just sums it up perfectly. The short-term economic pain is temporary, right? But the long-term trends that are driving crypto, things like regulatory clarity and wider adoption, those are structural. This is a classic setup where widespread fear and forced selling often create the absolute best buying opportunities, paving the way for powerful multi-month rallies. Which leaves us with this final, kind of provocative thought. In a world with increasing government dysfunction and economic uncertainty, could this kind of chaos actually be the ultimate long-term catalyst for a decentralized financial system? It's definitely something to think about.